Hey everyone, Coach Investor back on our earnings video for today. So, Sea Limited just reported their quarterly earnings, beat on revenue estimates, missed on EPS. The profitability side of the business did take a hit. Stock is down around 11% or so at the time of making this video. Of course, that can change whenever you're watching this video. Now, I do want to start off with a comment that the CEO made last quarter. Last quarter, profitability-wise, the business was doing much, much better. So everybody was thinking, okay, could this be a new chapter for this business? So, last quarter, they said this. In the past couple of quarters, we have not only achieved self-sufficiency, but also demonstrated the profitability of our model and our ability to manage fast and significant shifts in operational focus as we see fit. Given this, we have strengthened our execution capabilities and increased the stickiness of our ecosystem. We believe we are now on firmer footing to better serve our communities. He also finished by saying here, as we reaccelerate investments in growth, our strategic focus to build cost leadership and continually improve user experience remains key to our long-term success. So of course, many were expecting growth, but in a profitable way. Well, let's see exactly what has happened. So, started off by giving us a bit more information here. So our strategy for e-commerce is driven by the principle that maximizing the long-term profitability of the business will generate the greatest return to our shareholders in the long run. You can already guess, yes, the e-commerce side of the business was not profitable this quarter. And maximizing long-term profitability requires scale and strong market leadership. To achieve this long-term objective, we look at three key operational factors: growth, current profitability, and market share gain. In this current period, we will prioritize investing in the business to increase our market share and further strengthen our market leadership. Our move to self-sufficiency and profitability in the past quarters has significantly improved both our cash reserves and operational efficiency, and we see a very good opportunity to build our e-commerce content ecosystem efficiently, especially in live streaming. We are committed to maintaining a strong cash position, not relying on external funding, and investing within our means at a time and pace of our choosing. At the same time, given that e-commerce penetration remains low in most of our markets, we as the market leader have a responsibility to help grow the whole e-commerce ecosystem. Shopee will remain committed to doing so in a healthy and sustainable way and driving value creation for all stakeholders. Of course, we know that the e-commerce market is a highly competitive market, especially in all the markets that Shopee is playing in, right? In Asia, Southeast Asia, there is Lazada, there is TikTok Shop, even though there is a ban in Indonesia when it comes to TikTok Shop. I mean, still, TikTok Shop is available in a lot of other countries. Lazada is also doing a lot of discounts. There is Temu. So there is a lot of competition there. And then on the other side of the world, you have Amazon, you have Mercado Libre. I mean, the competition, there is plenty of. Just have to do it in a profitable way. Now, before jumping into the report, if you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, we really appreciate that. And thank you to all the new members. Your names will pop up on the screen right now. If you want to support me even further, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So, total GAAP revenue that increased 5% year over year. Of course, the biggest chunk of the revenue is still the e-commerce side of things. Then we go to digital entertainment and then the financial services. Now, with regards to total adjusted EBITDA, $35.3 million. But here, unlike last quarter, here you can see huge loss yet again when it comes to the e-commerce side. Now, talking about the e-commerce side, there is a positive thing here. So in Brazil, unit economics continue to improve, with contribution margin loss per order improving 90.7% year over year to reach 10 cents for the quarter. While it looks amazing, huge increase year over year, last quarter that was actually 24 cents. So keep that in mind. Again, they've done more spending in this quarter and they're growing in an unprofitable way, unlike last quarter. But like they've been saying, they have plenty of cash, $7.9 billion right now. So that's up $1 billion since Q4 2022. And so, e-commerce, Shopee, GAAP marketplace revenue increased 18% year over year. It's flat-ish quarter over quarter. I mean, if you look at core marketplace revenue, last quarter was 1.2. Now we're at 1.3, so a small increase there. But adjusted EBITDA, Asian markets, and the other ones as well, is now back at a loss. As we look at gross orders and GMV, by the way, this slide was not there last quarter, I believe. So GMV increased 5% year over year. Gross orders increased 13% year over year to 2.2 billion. Then as for the digital entertainment side, now this is very important because now back in India, they are available. Free Fire is back available there. So maybe we might see a big push in Q4. For those that are interested, if we look at the total downloads on Google Play worldwide, we can see that in the last 7 days, Free Fire stands at number 9, and in the last 10 days, it stands at number 9 as well. Again, this is Google Play worldwide downloads for games. So this could definitely have some positive impacts for Q4. Currently, digital entertainment bookings looks to have maybe bottomed-ish. Remains to be seen, but it's nice that we're not dropping yet again. Quarterly active users is flat here, but again, we might get a positive impact in Q4 from that Indian market. Quarterly paying user ratio, that continues to go down after we've gone up actually in Q2. Then as for SeaMoney, so that's up 37% year over year. Gross loans receivable increased by 5.3% sequentially to $2.4 billion before netting off allowance of credit losses of $288.1 million. And then non-performing loans past due by more than 90 days, a percentage of gross loans receivable was 1.6%, improving quarter over quarter. I believe last one was 2% or so. So, okay, a good improvement there. If we look at gross profit, $1.4 billion, up 17% year over year. But of course, quarter over quarter, it's down a bit. And here comes my big issue with it. Everything looks okay besides this. Sales and marketing expense is up 12% year over year and actually doubled, more than doubled actually, quarter over quarter. Now, when you more than doubled marketing expense quarter over quarter, you would have expected maybe a positive impact from that. Currently, we are not seeing that. Maybe they are preparing themselves for a very, very strong Q4. But keep that in mind. If they need to reaccelerate spending to have some growth, and we're not seeing that growth, then yes, you need to ask a lot of questions. And so we reach net loss. That's a loss of $144 million. Now, of course, I have to add this is a huge improvement year over year. And so if we look at the graph right now, we're back at around $40 or so. Of course, last time they reported earnings, we were a bit under $40, around $36 or so. And guess what? That area is the area we were back in March 2020 and also the top back in July 2019. So it does seem like an area where people like to accumulate. Now, I personally don't own Sea. I know a lot of people do own Sea when watching these videos and following on X or on some other platforms. Look, there's still a lot of potential with this company, but you have to be realistic. If they need to spend a lot of money to actually reaccelerate growth, you cannot do this in a profitable way. If suddenly we see Q4 expenses do not go up by much, but suddenly the business is growing faster than expected, then okay, we're back on track. Of course, it's just one quarter. Even if it's good or bad, it's just one quarter. Even if it's 2 or 3, you need to look at the big picture. You need to listen what they're saying to us. If they think they can grow, if they think they can take market share, then fine. But remember, they're operating in a highly competitive environment, a highly competitive industry as well. E-commerce, lots of players, lots of Chinese players, lots of players in America, in Latin America as well. So keep that in mind. So that will be it for this video. Of course, there will be the CPI report that will definitely move the market in either way. Do share your thoughts down in the comments below. Do you still own Sea? Are you looking to buy at better prices? Let me know down in the comments below. If you enjoy this type of videos, leave it a thumbs up. Subscribe if you have not, and I'll see you all in the next one. Bye bye.